Welcome to our corporate accounting class. Today also we are going to discuss about the same profit prior to incorporation, and this is a small problem, very apt one for section A 5 mark. See, in this question you are given with one trading account and P&L is given, and Raj Limited was incorporated on 1st July, taken over the business carried on by RJ Brothers on 1st April. So please understand, the business was taken over on 1st April and incorporated on 1st July. So we should know, from the date of start of the business to the date of incorporation, that is the registration, is taken as pre-incorporation period, and from the date of registration to the year end is taken as post incorporation period. Okay, so two things you should keep in mind: when the business was taken over and when the business got registered in the sense incorporated. Okay, accordingly we have to take the number of months from the date of start of the company to the date of incorporation is pre-incorporation period, and from the date of incorporation, that is the registration, to the year end given in the question. Don't assume April to March or January to December. What the information given in the question, accordingly you take the year end. Okay, pre-incorporation period, post-incorporation period we have taken. And another one is the sales. The total sales given in the question is 3 lakhs, and up to 30th 1 lakh rupees. So what is that? Total sale is 3 lakhs, and up to 30th, that means pre-incorporation period, the given sale is 1 lakh rupees. The remaining sales is taken as a post-incorporation period, that comes to 2 lakh rupees. So we have to take the sales ratio as 1 is to 2, 1 lakh and 2 lakhs. So 1 is to 2 we have to take, and the time ratio is taken as 3 months and 9 months, so 1 is to 3. Okay, then now take P&L account. See, no need to take that trading account, because gross profit is specifically given. Sales we have taken for the ascertainment of sales ratio. So now we have to consider only the P&L account. First item is administrative expenses, which is 18,000. Administrative expenses always apportioned based on time ratio. Here the time ratio is 1 is to 3. So the amount of administrative expenses 18,000 into 1 divided by 4 for the pre, and 3 divided by 4 for the post incorporation. Director fees, see, even in the previous two problems I told you the director fees is applicable only for the limited company, that is company business registered as per the provisions of Companies Act. Okay, here the director fees, so straight away we have to take only the post incorporation. What is the reason for this? Because the business will attain the position of company only if it is incorporated, registered as per Companies Act. So after that only we can take the director fees. Okay, that's why it is taken as already allocated or post incorporation period, whatever the name you mention in the column basis. Okay, it is based on post incorporation period. Then selling expense, no explanation is required for this. Title is selling expense, so it is apportioned on sales ratio. Then another one important thing is audit fees. I put a mark on that audit fees. Why? Because audit fees in some text it is apportioned only for post, that is only for applicable only for company, but I feel that is not the correct explanation, because the rule says that audit fees is required, auditing is required for all type of a business, even if it is a petty shop. If it is more than that stipulated level of income, it is supposed to be audited by the qualified auditor, and statement should be given. Though it is not the proper auditing is there, but at least that audited statement approved by the auditor, that statement should be submitted for income tax purpose. Okay, so that's why always I am taking audit fees applicable for both the pre-incorporation and also the post-incorporation period. The next item given here is preliminary expenses. What is this preliminary expense? Preliminary expenses is the amount of expense met by the organization for the start of the company, for starting the company. Okay, so certain type of expenses they may incur, that is called the preliminary expenses, where we will have the preliminary expenses only in case of a company. So what the amount given is straight away taken for post incorporation period, that is why I mentioned as allocated. Okay, so post incorporation period we have to take the preliminary expenses. Now what is the gross profit apportioned? It is based on sales ratio minus the expenses apportioned, balance you will get the profit. That amount of profit is maybe the net profit, but here as far as this statement is concerned, that profit is apportioned into two. One is pre-incorporation period and another one is post-incorporation period. Okay, in this question we are required to calculate profit earned, profit prior to incorporation. So how the profit prior to incorporation is ascertained, that point is asked in this question. But just for want of knowledge, I have shown you the both the pre-incorporation profit and post-incorporation profit I have shown here. Okay, so you practice related type of a problem. This problem is taken from Jain and Naran. This is problem number 2, and this is highly qualified for section A, that is for 5 marks.